I'm going to review my analysis on the four major sectors: energy, metals, stocks, and currencies. So far, everything is playing out pretty much exactly as I anticipated. Here we have the oil market. I've been saying, all along that I thought this intermediate cycle was going to at least test this $60 to $62 range. This is a consolidation point here. It's we're getting pretty late in this daily cycle. We're starting to get a bit stretched above the 50-day moving average, but we have broken out above this prior intermediate top. I was kind of expecting maybe a pullback from this resistance zone and then a push up to 60 to 62. But we've broken out above this, but because we are getting so late in this cycle, I suspect this is going to be maybe like a little bull trap, and we'll get a top here before too long, and a pullback, and then a push to that 60 to 62 dollar range. I really think it's probably too late in this intermediate or in this daily cycle here to just go straight up to 60 or 62. I could be wrong. The big picture call is that we're going to get to this level right here before this intermediate cycle tops. How we get there is still up in the air. Maybe my expectation is we get a little pullback first and then get there, but maybe we just go straight there and then that gives us our intermediate top. But so far the analysis on the oil market is playing out almost perfectly. Here we have the metals market, and if you'll remember, a couple months ago I floated the short cycle scenario where I theorized that we just had some really long cycles. This was a really long intermediate cycle. This was an exceptionally long intermediate cycle. This was a very long intermediate cycle. I thought because of that we would need maybe a short cycle to balance out these really long cycles. And some of this just has to do with the currency cycles have gotten stretched and elongated during the currency wars. So this is why the metals market is evolving and the cycles have been stretching somewhat. But so far the short cycle scenario is playing out. We topped right here. I call this top within pennies, and the short cycle is playing out. We've got the bounce out of this daily cycle low. I said at the time this was going to get everybody bullish. People would be jumping on the bandwagon looking for new highs, and I said it was not going to play out like that. That we would get a left translated cycle that would roll over and continue down into an ICL, and that is what is happening. The bounce was not able to recover and hold the 50-day moving average, and the 50-day moving average is now rolling over and turning down. So we've got what is going to look like a triple bottom here on the gold chart. When a support zone gets tested more than twice, it almost always breaks. That's I'm going to say with about 95% confidence that that's going to happen here. At some point in the next several weeks, we are going to break through this, and we're going to come on down and get our intermediate cycle low. And as it stands right now, this intermediate cycle is left translated, topped on, I believe this was week 8. So that would imply that we're going to drop below this July low and move our yearly cycle low from July into probably December again. That doesn't have to drop very far below this. My thought is that we're going to test this lower triangle trend line. So I put the trend lines in there for you. So yeah, my thought is that when this the support zone right here at about 1260 breaks, that we will get our bloodbath phase, come down and test this lower triangle trend line maybe in early December. The full moon, I think, occurs in the first week of December. The FOMC meeting is on the 13th. Both of those could be prime targets for the intermediate cycle to bottom, and this would potentially be a undercut low of this July low, and you know what that would do. If gold uh, moves below this July low, sentiment will go you know, uber bearish again. We'll start hearing the calls for sub $1,000 gold, and then that would be a prime spot for the market to turn and go back up. So the analysis on gold is also playing out pretty much to the letter, as I expected as well. The stock market, I said back here in August that when everybody else was calling for a crash in September and October, I warned people that the end of the year was the best time of the year, and that would start wherever the summer fall intermediate cycle low occurred. And this year it just happened to occur in August. So once that intermediate cycle low was completed, then we were going to move into the best part of the year for stocks, and that's exactly what has played out here. And the people that have been listening to the perma bears predict a crash over and over, of course, have missed this entire run. We're not done yet. These intermediate cycle lows, even though the stock cycles have become a bit erratic, the daily cycles have been somewhat long, and the intermediate cycles have been the intermediate cycle declines have been pretty mild. So far we have not broken the intermediate cycles. We're still getting them in the normal timing band. So this one occurred, I believe it was on week 21. I think this one, without going back and counting, it was on week 20, I believe. I doubt. I'm about 95% confident this intermediate cycle here is not going to top until at least the FOMC meeting. We're on week 11 this week. The FOMC meeting would be week 16. So I think it's foolish to try and expect anything other than just minor pullbacks. Before that, the Fed is going to raise rates on the December FOMC meeting. They're going to make sure that the market is in an uptrend, and preferably at all-time highs for that meeting. So I'm going to tell you we got at least 5 more weeks left before this larger intermediate cycle tops, and so far there's nothing here that would convince me that we are not in the vertical phase. And if that's the case, then the next pullback into the next intermediate cycle low will probably also be pretty mild, similar to this one and this one here. Both of these intermediate cycle lows were quite mild. I expect the next one probably will be as well. So the stock market analysis also is playing out pretty much as predicted. And also of note, the semiconductor index, which has been the leading index out of the bottom, and all of these calls for a recession just nonsense. The market is being led by the economically sensitive semiconductor index. We're not even vaguely close to recessionary conditions in the United States at this point. Not yet. And as you remember, I've done several videos pointing out that the 2000 high was at, the actual number is at 1362, and this, I told people this intermediate cycle was not going to top until the semis at least test that 2000 high. We tested 1300 on Friday, so we got about another 62 points still before this intermediate cycle tops. And don't forget that there's potentially 2 ways this could top. It could come up just a little bit short, maybe 1355 and top, or the banks could, since a lot of people are looking at this, the banks could push this index above 1362 to convince everyone that we're not going to stop at resistance and we're going to just break through it and run, and then they sell their positions into that breakout. Major significant tops often occur like that. So I'm going to say we got at least to 1355 before this this run in the semis tops, and we might get a a bull trap move above 1362 to draw in everybody buying what they think is going to be a breakout, and then we get a correction. But the big picture is still the same. My analysis of the semis are going to hit that 2000 top before correcting has been right on target. So again, everything is playing out pretty much as I've been calling for. And finally, the currencies, and I'm just going to look at the euro here because the dollar moves inversely to the euro. I noted a couple of months ago that this was basically the last line of defense in the currencies, that we had a major resistance zone here at 120 in the euro, and if that got breached, then the dollar was just going to fall into the depths of hell, and with no bounce at all, and it was game over. But it seemed unlikely to me that the euro was going to be able to break through this. You see these major multi-year cycle lows occurring right here at this 120 level, and it seemed unlikely that the euro would be able to break through that on the first try. And in order for the dollar to just collapse, that would have to happen. And so my bet was that the euro was going to give us a pullback, an intermediate degree pullback from this major resistance zone, and then that would build up the energy to then break through that sometime in 2018, and that would confirm a bear market in the dollar and confirm the bull market in the euro. And so that analysis also has played out pretty much as expected. We came right up, tested this 120 level here, and we are pulling back into an intermediate cycle decline. And a potential spot for this, for the euro to bottom, the dollar to top, will be that FOMC meeting in December where the Fed raises rates. The vast majority of clueless traders will think that is bullish for the dollar, and it will be the opposite. That will be the top in the dollar on that rate hike, and the dollar will then roll over and start the bear market in earnest. That will be the point at which the euro bottoms and starts to move higher and finally breaks through this major resistance at 120. And when it does, it's got a lot of room to the upside, all the way to 140 before we get any kind of resistance in the euro. So so we are setting up for the dollar to start the bear market in earnest, and the euro is going to start a bull market in earnest. We just need to complete these counter trend moves, which I think will finish on the FOMC meeting. So all in all, pretty much all of my calls on all of the major asset classes are working out just as expected.